Today we're going to look at the multifamily rental market in the Tyler Longview MSA, which is located in Southeast Texas. I've got the map kind of rolled out here so you can kind of get an idea where it is located. So here's the Dallas-Fort Worth area. Here is I-20, and Tyler is on the west side. Longview is on the east side and is just prior, about 60 miles before you get to the Texas-Louisiana state line, and there is Shreveport. So that gives you kind of an idea of where this market is located. And I used to own in this market. As a matter of fact, this property right here that is currently for sale, when we bought it, it was called Rayanne Apartments. We turned it into Volare on High Street, and the company that bought it from us now owns it and called it the Tropicana Apartments and is reselling it. All the renovations that you see, all the images that it shows for this property, these are all the renovations we did. We had this trellis built. We had a lot of this landscape done. They did do some upgrading to the landscaping, but everything you see that's been done to this property, we did. So I'm not too sure what they did to this thing. And this $2.95 million purchase price is laughable, because their average rents are about $650, and this is in a lower income area of Longview. So be careful of that one if you're buying it. All right, let's look at the rental market, shall we? So let's go to analytics, and just so you're aware, and so I can remind you that in the filters, we are excluding all corporate, all military, all senior, all vacation, and we are just looking at market and market affordable. All right, those are our only selection criteria. So we can see that there are 20,296 units in the marketplace. There is 272 left under construction. Prior period was 557. 12-month absorption, 174 people have left this market in the last 12 months. In the prior period, they added 505. The vacancy rate shows that. So we were at 4.7 a year ago. Now we're at 6.9%. It's showing a market rent of $1042 with the prior period of $993, and we have $117,000 per door with the prior period of $109. Now, again, the sale data lags probably a quarter or two with CoStar, where the rental data only lags about 6 weeks. And then, of course, it's still showing somewhat of a downtrend on market cap rate. Again, this is all asset classes A, B, and C. Once we look at the data for all asset classes, we will then turn around and look at it for the A's, look at it for the B's, and look at it for the C's. So let's look at the data. What do we have for our data? We look at effective rent because we don't care what a property management company is asking. We want to know what they are receiving. So effective rent shows us what the rents that are actually being collected are. So we can see that in the first quarter of 2022, it was 1,004, went up to 1,033, went up to 1,040, and at that point it said, well, that's about as high as we're willing to go, and now it's starting to trend downward. Okay, the exit that we saw in the absorption would have a great effect on this. So let's go look at our construction data. So we can see that there were about 300 deliveries in the first 2 quarters. They only absorbed about 50 of those 300. That is not good. And then the 50 that came, 77 left in the next quarter, and then 148 in the next quarter. So this is a great explanation of why vacancy has gone from 94.9, basically 95%, down to 93%. So a 2% increase in vacancy, decrease in occupancy, primarily because the market is leaving. The rents are too high, or they could be moving to the Class B properties. We'll have to see. All right, we'll see where this exit is happening. Is it happening in the A's? Is it happening in the B's? Is it happening in the C's? And we can kind of get an idea from there. All right, but overall, this is where that exit is occurring. So let's go look at it in the A's. So here's our data for Class A properties. Again, effective rent. There's only 1,952 units in the MSA for both Tyler and Longview. We started at 1332 in Q1, went to 1357, went to 1405, and then started declining down to 1384. So let's go back to the construction data and see, all right, so delivered no units during that time and negative absorption during that time. So what this says is that this market can no longer afford these Class A properties, so they are either moving to the Bs, moving to the Cs, or they're moving out or buying single-family homes. Okay, I don't know what the single-family market looks like in the Tyler Longview market. It is far enough in between Dallas and Shreveport that it is not affected by Dallas prices, and we can see that with these rents. Okay, so let's go look at the Class B market and see how that's being affected. All right, so here's our Class B data. Again, effective rents. Q1, we were at 1059, went to 1087 in Q2, and are already starting the downtrend since Q2, albeit small. So slowly trending down, but it is trending down. So let's go look at our data here. So CoStar is showing that the 400 units that have delivered are in the Class B space, so that's interesting. And what that may, here's your under construction stuff. So they're saying that the rents are high enough where they can deliver Bs. Since we're looking at market and market/affordable, I would not believe that these are tax credit properties. So they are building to the Class B space. But we can see that once again, here's that exodus. So out of 400 units, they filled up almost 200, so about 50%. But then 82 have left since that 200. So we're seeing a negative trend again. So we're not seeing the Bs moving to the As because the As are declining, and we're not seeing a growth in the Bs. So that tells me that the As aren't moving to the Bs and the Cs aren't moving to the Bs. So something interesting is happening in this market. So that being said, let's go look at the Cs. All right, so here is our Class C data. We are still in effective rent, and we can see that in Q1 we are at 872, grew to 904 in Q2, grew to 911 in Q3, and now we're starting a downtrend, albeit fairly small. So let's see what our absorption data looks like, because you should have nothing delivering or under construction for Class C. So it is showing an exodus. So it's interesting that you're seeing rental increases when you're having a vacancy increase and absorption going negative. That is contradictory to the data. So you are going to start to see a pretty significant downtrend in the rents for this Class C market as people continue to leave and the vacancy continues to increase. Okay, so these rents where they are now, they are definitely too much for this market, and people are saying that's it, we can't pay this anymore, and so we're going to move out. Now, what could be happening, and I mentioned this in other markets, is when you have an affordability problem, they still work in that area, so it's not like they can move somewhere else. Now, they may actually do that, or maybe they go find a mobile home to move into, but what's more than likely occurring, since they probably aren't able to afford a mortgage right now with the interest rates as high as they are, and these rents lower than most of the markets we see, is you're having people roommate up. So where you've got one person that has maybe a 2 or a 3 bedroom apartment, or maybe a couple that has a 2 or 3 bedroom apartment, they are renting to another person or another couple. And what that's doing is that's affecting the demand in the market. So if you have 2 different people that are renting 2 units in the market, one moves out causing negative absorption, moves in with that other person, then you do not show that person that moved out absorbing anywhere else because that other unit was already occupied. So when we hit an affordability apex, then people start moving in together, 2, 3, 4 people at a time. That affects the demand, and that could be what we're seeing here. So this concludes the Longview Tyler MSA. I hope this was helpful. Very interesting market. with the rents showing the way they are, it'll be very interesting to see if SVN can sell that 38 unit property that we used to own for $2.9 million. That's very crazy. But, you know, stranger things have happened in this marketplace. All right. I look forward to seeing you on the next video, which is going to be the Evansville, Indiana MSA. See you tomorrow.